Chevron and ExxonMobil are reporting record profits as oil prices surged during the Iran war. In an earnings report Friday, Exxon reported it's doubled its second quarter profits to $14.5 billion. That's a 105% increase from the year prior. Chevron quadrupled its profits from last year to $12 billion. Oil prices have surged amid the U.S. war with Iran, with prices of Brent crude reaching $126 at one point. And that led to higher prices, of course, at the pump. Joining us now to break this down is Gerson Gibbs, Senior Managing Partner at Belite Capital. Gerson, good morning. Great to see you.
Good morning. Thanks for having me.
Absolutely. So, Gerson, Americans may be hearing this, seeing those numbers, and thinking to themselves, why are these oil companies making record profits while we are paying so much at the gas pump? Is this a valid concern?
Um, it should be a bit concerning. Anything that has an increasing pricing that we see directly at the pump should be concerning. However, I don't think there's too much control that they have because it's just the average pricing, the WTI, hasn't increased around the world, which leads to a direct impact on their pricing models. So it ultimately had to rise just to fit what's happening in the world and in the economy.
Now, is this an issue of supply and demand we're talking about, or are we really just talking about the global market and the price set there?
I think it's more so about the global market, a little bit with regard to supply and demand. If the Strait of Hormuz is being held up, that means that the supply is being held up. So it has a direct impact on a global scale. However, we're pretty limited on purchasing our oil from the Middle East. Only about 8% comes from the Middle East into us domestically. However, the way that the price is kind of managed is the overall global price. And if the price goes up globally, it goes up domestically, whether we're purchasing from um, the Middle East or not.
Right, because as you know, we did hear the Trump administration from the start of the war assure the American people that most of U.S.'s oil, as you mentioned, does not come through the Strait of Hormuz, but we are still being impacted by its closure because of the global market.
Correct, correct. So the global market kind of determines the actual price. That's why we're seeing such volatility in the pricing. When at one point it's open, which we see a drop. We saw a drop last month to about 360, 368 a barrel, and then we just seen another increase back up to about 410 in just a month. But that was because they were in the middle of negotiations, and the Strait of Hormuz opened up temporarily, which led to a drop in pricing.
We're hearing that talks with Iran could again, could continue again this week. When can Americans expect some relief? What signs should we be looking out for?
I think an extended period of reopening would be a great sign. I think that these temporary openings are signals that we're getting closer. But I think the longer that the strait stays open, whether they're in the middle of negotiations or just having the discussions, the longer it stays open, the more we can be a little bit more confident in the sense that this is coming closer to some type of resolution.
Gerson, before we let you go, I do want to ask you also about the news we've been following this morning of the U.S. buying Japanese yen. What's your take on this strategy?
I think this strategy is necessary. Japan holds a lot of U.S. Treasury bonds, and because of the impact in oil, like the correlation between the two, just like the Strait of Hormuz is causing inflation here, it's also happening in Japan. So the yen is weakening, and because of that, um, people in the United States and government officials, especially Treasury officials, believe that it will lead to Japanese selling off Treasury bonds, which will lead directly to an increase in our mortgages, our interest rates. It can be a bit of a problem on our end while we're still managing the problems that are occurring directly because of the Strait of Hormuz. So I think that this was more of a strategic move from the United States to ensure that Japan doesn't sell off Treasury bonds, which will have a direct impact on our mortgage markets.
Yeah, all the economies are connected in a very tight way.
Yes.
Gerson Gibbs, Senior Managing Partner at Belite Capital. Thanks so much for your perspective this morning.